Kitco News special coverage of the 31st Global Metals and Mining Conference is brought to you by Gold Terra.
Hello and welcome back to Kitco News with me, Paul Harris. We're at the BMO Metals and Mining event in Florida, and I'm joined this afternoon by Martin Horgan, CEO of Centamin. Good afternoon, Martin.
Hi, Paul. Thanks for having me.
You're welcome. Centamin, you're a gold producer in Africa, specifically in Egypt with the Sukari asset. You had a pretty good year last year. You hit your guidance of more than 400,000 ounces of production at an all-in sustaining cost of around $1,200 per ounce. Imagine you're very happy with that. What were you most pleased with from the performance last year?
I think last year was a big year for us. I joined the company 18 months ago. Company at that point had not made guidance for 2 or 3 years. Was struggling a little bit with its reputation in the market of being able to deliver, and there's a few question marks about it. So myself and a few others joined the team, augmented the existing team in place, and then we really laid out a recovery or a reset plan for the asset. One of the things we really focused on was on delivery. We wanted to make commitments and then be seen to delivering into them. So clearly guidance is a key one in terms of ounces and costs, and as you say, we actually met that as well, which is fantastic. First time in 3 years that guidance has been achieved. But also alongside the production guidance as well, we set some key strategic targets as well. Reviewed the West African portfolio we had and delivered an outcome from that. We delivered a new life of mine plan update as well, and we secured some exploration ground in Egypt as well. So actually I think 21 was a big year for us, a lot of heavy lifting. But really sort of sets it on the path for the next 10 or 15 years to go forward from there. So, yeah, I think a good year, a satisfactory one, and not just on the production, as I say, but across the strategic review of the business as well.
Excellent. Well, congratulations there, Martin. And there's more to come from Sukari, isn't there? I mean, you're on a pathway. Your aim is to get up to 500,000 ounces a year, continue fixing the asset. You recently switched to an owner-operated model. Tell us a little bit about that. What's still to fix at Sukari?
I think as part of the reset process we went through, we went back to I should have used the term, a back to basics approach, which I know it's got connotations from the 1990 Tory party in the UK, but we did go back to a back to basics approach. We focused on people and processes, and really the idea was to pull the asset apart, look at its constituent parts and put it back together and see what it told us. We went through that process. We envisaged that we'd be able to sort of, confirm what was at that point a plus 10-year mine life, targeting that 450 to 500,000 ounce production profile. I think what surprised us is that as we looked at what was a fairly mature business, 10 years of operation, is that the amount of opportunity we identified that was still left to come. I think geologically, I've said a number of times that the ore body isn't geologically constrained, it's drill constrained. We haven't found the bottom or the edges. And I think we see a lot of upside in the resources, certainly in the underground. Last year we added 200% to our underground reserves and took a 4-year life to 9 years. And in total added over 1 million ounces to our reserve base through the work we did as well. So I think there's still a lot more growth to come from the business in terms of resource growth. We found some super high-grade areas that were in there as well, which will come into the underground plan, which we're delighted about. And also we looked at the underground expansion, the ability to produce more gold from the underground. Part of that, we did move to an owner mining model, as you said, with a contract finishing last year. And really looking forward to push that on. And we believe that will take us to that 500,000 ounce level consistently over the next sort of 12 years as we go forward. Production's one side of the coin. We like cash flow. That's what drives us. The other thing was the cost base and the ability to take costs out of the business. We felt that resource growth was there, but importantly, we also felt there's a good opportunity to reduce that cost base and really drive the cash flow as well. Some wonderful initiatives coming through that now, our solar plants, potential connection to the grid. We're looking at lightweight truck trays, the mining underground contract going as well. So we're really focused on cost control. We've set ourselves a target of $150 million of cost savings, and we're about $60 million into that as well. So yeah, I think there's still a lot more to come from Sukari, certainly in the both ore body growth and the production levels, but also the cost reduction as well, that really see us drive some significant cash flows as we go forward over the next 12 years plus. Okay,
so 500,000 ounces a year production for sort of 10 years and a cost, all-in sustaining cost getting down towards that $1,000 per ounce mark. That's, in most people's definition, that's becoming a tier one asset.
Yeah, look, absolutely. Look, I think for us, we're not looking to sort of, drive the asset's production or performance to meet a particular bracket or badge. What we're looking to do is basically try and maximize the value of the asset. And then we'll be led by a bottom-up approach. What does the geology tell us? What does the engineering tell us? What can we achieve effectively? I do think it will sit us at that 500 to 550,000 ounce type target. It is badged at that point. People talk about a tier one asset as well, and it clearly is a fantastic asset. I think we're coming up to our 5 millionth ounce produced this year, and as I say, another 12 years to come ahead of us as well. So yeah, look, I think it's significant. I understand as well, it's probably the only asset of this scale that's not inside a larger diversified company as a standalone opportunity there. But it's one that we see as a real foundation that we can build our business from as well. Actually, we think that with having fixed Sukari now, it really is a platform for us to now go and look to further growth, both in Egypt, in West Africa, and elsewhere across the continent as well.
Okay, when people think of gold producing jurisdictions, Egypt isn't the top of anybody's list, but it has a history, a millennial history of producing gold, obviously going back to the Egyptian pharaohs. In more recent times, it's been, in addition to yourselves, it's drawing some big companies such as B2 Gold and Barrick Gold actively exploring. You've also got exploration potential beyond Sukari. What is the potential of Egypt?
So I started working in Egypt just under 2 years ago now, and I've spent the last 25 years various parts of the world and predominantly Africa. And what's really struck me about Egypt is that when you get there, it's a great place to work. We're basically on the Red Sea and the Mediterranean, so there's great port access, fantastic road network as well from infrastructure, power's readily available, a large oil and gas sector, which means good engineering skills, good quality of people, tertiary education, good supply chain opportunity as well. So you put all those things together, and actually, it's a pretty easy place to work. Good security and political stability as well recently. So that's a good place to work. As you say, a long history, as you say, going back millennia of gold production there. And the question was, why isn't there more gold mining in Egypt? Why is Sukari the only commercial mine? And I think one of the things that's really sort of impressed us is that the Minister of Petroleum, His Excellency Tariq El Molla, he asked the same question 3 or 4 years ago. He said, why don't we have a domestic hard rock sector? And the answer he got was that the mining code effectively was more akin to an oil and gas style a concession agreement with profit and production sharing. And that just doesn't work for the hard rock sector. And he took it on himself to basically revolutionise and change the mining sector and bring that back into line with international standards. So he's actually pushed through law now where we're basically moving to a royalty, free carry and a normal taxation model as well. And I think with them pushing that through, that framework now is the final piece of the jigsaw that now attracts that sort of potential. When we look at the geological potential, it's probably one of the last great unexplored terrains of the world, as you say. Huge amounts of gold potential there. So we've got all that infrastructure we talked about, all the people there, and now an investable mining code as well. And I think that's why we start to see companies, as you say, like Barrick and B2, joining us now in Egypt as we go forward as well. So we think it's a really exciting place to be right now.
Well, thank you. That sort of new framework, is that all in place, or are there still bits of that need to be perfected?
So the exploration portion is done. That's signed up at this stage. The mining code itself, the exploitation phase, I'd say that's about 90% of the way there. And actually ourselves, Barrick and B2, have formed an advisory group working with the government to iron out those last few wrinkles around the exploitation code. And what we're aiming to do is come up with a framework model agreement that is common to all companies in Egypt that get into the mining space and have that in line with international norms as well. So we're just working through that. We've set ourselves a target by Q3 this year that we'll have negotiated with the government and finalised that. Negotiations are going well. We've got our negotiating group with ourselves, Barrick and B2. We've got counsel on board, we've got financial advisors, and the government have reciprocated as well. So that's moving forward, and those final few points to iron out over the coming 6 months.
Okay, what about the fiscal aspects about producing in B2? A lot of countries provide tax stability agreements for mining developers and producers. Is that present? Is that figure present in Egypt, or does it handle the fiscal aspects in a different way?
No, so that's one of the things that we're looking to do, is just to bottom out those key terms that we would, as an industry, expect to see in the exploitation code. So things like stability, seat of arbitration, a contingent right once a feasibility study to go to a mining license. These are the sort of framework points that we're now finally negotiating with the government to make sure that we end up with a code that is investable, from an international basis, both for companies and their financiers.
Okay. Now, obviously, Sukari in Egypt is the flagship for the company. But you're not just active in Egypt, are you? You've got the Doropo development stage project in the Côte d'Ivoire. You've just recently put out a pre-feasibility on that. What is it? 150,000 ounces a year. Looking at there. What's the plan there?
So when I joined the business, obviously Sukari was the main part of the asset base, but the company had a fairly well-endowed mineral resource base in West Africa. A project in Burkina Faso, Bati West. 2 projects in Côte d'Ivoire, the Doropo, as you mentioned, and a further one called ABC. I joined Centamin from a small company, it was a private company called Toro Gold, where we actually found, developed, and then operated a gold mine in Senegal. And a few of the team members came across with me to Centamin. So I think we feel very comfortable working in Francophone West Africa and feel very comfortable understanding the process from resource development through to construction into operations as well. So one of the things we did last year was that we said that we would take this portfolio of ounces and we'd basically look to see if there was value in there, and if there was value, how do we realise that value on behalf of shareholders? So we completed that review during May of last year. The project in Burkina Faso didn't quite meet our hurdle rates, and we believe there's a viable project in there, and that's currently an asset held for sale by us. The ABC project in Côte d'Ivoire as well, really interesting project, couple of million ounce endowment at this stage, but also about 20 kilometers of untested strike of further potential. So we've kind of gone a bit more regional now and looking to generate more targets to build on top of that 2 million ounce resource base. But the real star that came out of that review was Doropo, as you say. A 5 million ounce resource endowment. We did a scoping study for that, and that showed us what we believe has the potential to be a couple of million ounce reserve, producing initially 200,000 ounces, but dropping down to that 150 level later on. The capex just north of sort of 200, 225, we think it'll come in from there. So with that sort of confidence, with that encouragement, we launched a pre-feasibility study, and that should be finished Q3 this year, where we'll update from market. On the assumption that that's positive, there's probably another year then to roll into the feasibility and ESIA work that would take us to sort of Q3 23. And again, if positive and we take it forward, we're probably looking at about a 15 to 18 month construction period. And I'd see first gold coming out of Doropo early 2025 as well. And we think that's fantastic. You know, we've been a single asset, single jurisdiction business. We have been focused, I guess, accused in the past of being focused on dividend paying and lack that side diversification and scale and growth. And I think the ability to deliver that on behalf of Shell, it's already in the business, will allow us now to be a multi-asset, multi-jurisdictional producer and really start to sort of deliver those growth plans for us as well.
Okay, well, let's expand on that. You know, what's the overall strategy of the company? Africa's been a very fertile ground for for creation of big companies. You look at, you know, B2 Gold, Barrick Gold, Endeavour Mining, Fortuna Silver's recently acquired Rox Gold to get active in Africa.
Yeah.
So do you see yourselves as increasingly becoming in the crosshairs of bigger companies, or are you looking to become one of the bigger company yourself?
Look, I think we've just completed our life of asset review for Sukari, as you know, back in December last year. And I think that's allowed us as a management team and a board now to really sit down now, start to map out what the next 5, 10 and 15 years look like for us as a business. Cash flow generation, our capital requirements for developing West Africa, our ability to support dividend through the cycle as well. So we're now really starting to have a really good understanding of how the business evolves and maps out over the coming years. And with that strategic review underway now, we can also look to how do we basically sort of build the business from here. Sukari is a fantastic asset, as we've said, and we see that as a real platform to build a business from. That's a real foundation on which you can start to hang a pretty significant business. So we're actively now able to start looking at opportunities to try and bolt on additional projects or assets that we can start to accelerate that growth potential and have a multi-asset, multi-jurisdictional company. Having said that, of course, it's a tier one asset. It's producing 500,000 ounces from a single place. It sits in the middle of a strategic, very exciting land package in Egypt. Of course, it's going to draw some attention. Probably the first time in my life I've been one of the prettier girls at the disco. It's never happened to me before, so, these things go there. Look, we don't get up and worry about that. We focus on delivering the company on behalf of our shareholders. We focus on maximising value. And if eventually someone taps us on the shoulder, we'll cross that bridge as and when we come to it. But that's not something that we're focused on today. We're focused on maximising the value of the asset base and then delivering that for our shareholders.
Thank you, Martin. Now, in terms of the future development of Doropo, we're in an inflationary environment. Costs are going up for many things. As you advance the pre-feasibility study, how is cost inflation impacting operations and development in Africa, and how can you manage that?
Yeah, look, I think, as you say, cost inflation, certainly the bogeyman that appeared sort of during Q4 last year and into this first quarter. Look, I think when we think about inflation, I think there's probably a couple of things we consider. One is the sort of transitory short-term nature of some inflationary pressures that we see right now. Do we believe that they are in place for the next 3 to 5 years, or are they short-term things that we've got to manage our way through? Or are these structural changes in the sector that we're now going to have to live with on an ongoing basis? So we do think about differentiating between those two types of short-term versus medium to long-term inflation. I think one of the things that we've looked at, as I mentioned before, we put in place a cost-cutting initiative basis for Centamin about 15 months ago now. But I do think that one of the things that we've noticed, and it's kind of a nice sort of crossover here, is that we also see as part of our decarbonisation strategy is that there's actually quite a bit of crossover where we're seeing opportunities to basically reduce our carbon footprint, and at the same time offer really good business opportunities by also reducing the cost base. So a really good example is our solar project at the Sukari mine. That's a 36 megawatts power plant. It will basically cost us $36 million to build. We're about halfway through the build. It should come on stream middle of this year. But at current diesel prices, that'll save us about $1 million a month. So, probably a little bit more. So there's a 2.5 to 3 year payback. So there's a great opportunity to take a significant chunk of costs out of the business to fight those inflationary pressures, and at the same time start contributing towards our net zero targets as well as a business. So there's a number of opportunities that we're seeing now that are actually really nicely sort of coming together from an ESG perspective, that also are sort of good business practice as well, and finding some really sort of good productivity and cost savings as part of the process as well.
And I suppose to add to that, development of a solar plant, in addition to all those, the environmental and the cost aspects you mentioned, it's there's the legacy aspect of it as well, because the solar plant can stay there once the mine is exhausted and continue to generate power for the local community and the local region.
Absolutely. No, look, and to be honest with you, if you're going to build a solar plant anywhere in the world, you'd probably pick Egypt. It's got some of the highest solar irradiance. It's a fantastic spot for solar. There's a pretty strong domestic construction community within Egypt. They've got a lot of solar capacity. So for us, it was a chance to use a local supplier to build this, and as you say, post the mine life, the ability to sort of grandfather that to the local community is something that we can leave as an enduring legacy from there as well. There's a lot of collateral benefits to it.
Thank you, Martin. Now, to sort of close up this year, what are the sort of key catalysts you want to achieve? Where do you want to be at the end of the year?
Good question. Look, I think there's a lot of work. We finished that first iteration of the planning last year, and that led us to identify a number of further opportunities that we could deliver. So when I think about this year, we've got an underground expansion study that's coming through that we believe will show us an ability to increase that underground production rate, which will drive a higher ounce production profile at Sukari. We've got our resource and reserve update to come. We think there's more growth in the resources. We had 1 million ounces last year. Probably not going to add 1 million ounces this year, but I do think there's some good growth to come on the ore body. We're going to get our boots on the ground in terms of the exploration properties that we've now picked up as well, starting to see some early results coming back from that. We're just about to do the first airborne geophysical survey that Egypt's ever seen. We've actually got the helicopter on site now. That's hugely exciting for us as well. And of course, we've got the PFS due out for Doropo as well. So again, 21 was a busy year, but I think 22 is going to be equally as busy. But I think, having sort of broken the back of the hard work last year, we're now looking at some really positive news flow to come for this year as we go forward as well. So it's head down and crack on for another busy year.
Well, excellent. I wish you the best of luck there, Martin. Martin Horgan, CEO of Centamin. Thank you for joining us this afternoon.
Thank you very much for having me.
Kitco News special coverage of the 31st Global Metals and Mining Conference is brought to you by Gold Terra,